March picks up where February left off as the bulls continue to run on Wall Street. This amongst a host of Canadian GDP news ahead of next week's ton of economic news. We have rate announcements out of Australia, out of Canada, out of Europe, and then Canadian and non-farm payroll numbers next week. Volatility certainly rearing its head once again to end the first quarter. Welcome to the MTI Minute. This is Kevin Dixon, Senior Trading Analyst at Market Traders Institute. Boy, I tell you what, we started out of the gate really strong to put a larger stamp on what's been one of the most bullish first quarters on record. As always, we let the charts do the talking as we head into the spiders. Now again, we gapped up very well. We're down a little bit from the open. Markets are taking a little bit of profit into today. But what was important today is what we're establishing for the next few weeks. Buying dips, buying dips. Remember, a bull market is a series of higher lows and higher highs. So in a bull market, you're buying dips. In a bear market, you're selling tops. Lower highs, lower lows. Now the dynamic changes with the moving average crossovers, the diamonds. Very briefly here, doesn't really matter what happens today because again, this is setting up for next week. I think we're going to see some new highs on the Dow within the next few weeks. The NASDAQ 100 with the crossover of the 50-period EMAs starting to illustrate further buying coming through. I've actually drawn up a line to get long the Qs probably this next week when we break the 5-day high, which is right here to 174.66. So we're going to get long the Qs via calls. We're talking about the 167.50, maybe the 170 long call, breaking 175 in the next week. I'll detail that trade to you during next week's conversation. It is not a go moment today. And the only thing that matters with the Russell 2000 is that we're moving out of these corrective measures and starting to evoke a crossover there as well. So setting up further as we're getting into the end of the earnings season. This is crude oil. Now I want to tell you, Canadian GDP numbers came out and they were not very good. So within the first hour of opening bell today, from 7:45 to 9 o'clock, you had huge pip moves across everything in the Canadian dollar basket to Canadian dollar strength. Crude oil. Crude oil has been flat all over the place today, weaving and dodging, walking around like a drunken sailor. Not that there's anything wrong with that, but you can see the price is bouncing around a great deal. We're going to go back into the charts on crude, not to be anything other than crude. About crude, going down, and we'll look at a 15-minute interval here, building up on crude oil. Look at that wild and wavy price. Now remember, Baker Hughes rig count comes out around 12 to 1 o'clock. We should see a little bit more push through, but this directly influences our top basket of the day. Before I go there, I want to go here. We've been working with a retail group, and I've been having you follow along as we're selecting a couple of stocks out there to use calls and puts to trade the leverage of the marketplace. And Foot Locker reported earnings today. Foot Locker's earnings report was really influential on helping us complete the trade loading up here on Nikes. I'm getting the symbols to load up. And so here's Nike. As you know, we've been monitoring this for the last few weeks, got long the call back on February 7th at $80 strike, knocked out 56% at the open today. The gap up occurred here because of Foot Locker's earnings. In the stock market, you have a lot of birds of a feather that flock together. It's called sectors. Sectors move together. For example, generally, oil companies are going to move together, or retail companies are going to move together. In the case of Foot Locker reporting earnings, Foot Locker sells a lot of Nike. You know, some of your other shoe stores like DSW. So anytime that they're reporting strong sales, it's going to impact like a Crocs. It's going to impact a Nike. And so therefore, book it if you took it. You should be in cash waiting for that next leg back up into the trade as we talk more about some retailers. Now the retail sector looking pretty good. We've still got Dollar General floating along, rolling towards our target there. We still got plenty of time to roll to that. Looking to get some new entries on Tractor Supply. Tractor Supply sets up a great deal. I'll continue to show you these as they come through and two, but let's talk some currencies here. I'm not going to fool around. The pounds aren't doing much today. There's no reason to get down with the pound unless you just want to get down with the pound. No reason to do too much euro blasting because the game is here on the Canadian dollar. This is the 15-minute interval. Remember a moment ago I described to you that right around 7:45 we had some big kick on the day. Check this out. I'm going to use the big rule measuring tool. Here is the opportunity that you see 137 pips. What? This is dollar CAD from 7:30 this morning. Oh, my stars and garters. Really all over the place. Look at the Euro CAD jump here. This is a 2-hour bar on Euro CAD. Once again, this is good for day trading. For swing trading, you're wrong fast. Look at this wide range Euro CAD. 170 pips today. Talking about starting March off. And folks, going to a smaller time frame, going to the 15, this is all Canadian dollar weakness doing the work here. Look at that big blast off candlestick. Mel knocked out a ton of pips on this. Marilyn knocked out a ton of pips on this. Anita knocked out a ton of pips on this. And Patricia also made a ton of pips on this. What is this? This is the pound CAD. Now, we had a big move. It's not really the pound doing so much. The pound is consolidating. But there's 152 pips on a 2-hour bar, 7 and 9 a.m. A huge move there, consolidating now back above $1.75. So for those of you in opening bell, yeah, that $1.75 trade kicked, and you should be looking at 30 or 40 pips now, even as we watch the CAD yen breaking below 85 cents. Now, again, I thought this was a really big overreaction to those Canadian GDP numbers, but you know what I think? I'm a price action trader, and I use a set of rules I call the Bob Barker rules. You can think what you want to think, but the price is right. Back into the Canadian dollar here, even weakening up against a weak Japanese yen. And look at this big move here as well, as I just take the measuring tool here in Smart Trader and show you the feast of opportunity. 80 pips within a few hours, folks. When the markets give you a gift, you take it. When you get this type of price action on your side of the fence, you make sure it stays in your yard, and you can always get another trade out as we break support or we break resistance. Now, I'm going to end our conversation here today where our conversation should remain centered around as we head into this weekend and into next week, and that's on the pound. We haven't had any real updates on Brexit in the last few days, so therefore, the pounds have actually been doing some selling going on. But let's be very careful. The pounds are jumping a great deal anytime we get some positive dialogue about a vote, about this or about that. Even if you have 3/8 and you do go fish, next thing you know, the pound's going to give you something to do and jump around for you there. So remember, the risk in pounds is the fast-moving trades as we're back into those charts on the sterlings across the board. Guppenstein, the guppy, down the day, and this is a 2-hour bar, just consolidating here beneath 148.50. Your next breakout long will take you above the 148.50 level. And as we discussed yesterday, there's going to be a bounty of pips out there for you. The commodity currencies, the pound Aussies, the pound CADs, the pound New Zealands continue to hold a lot of sway. Like I said, as we're going to see interest rates out of Canada and out of Australia next week that are even going to bring more influence into metals and into energy stocks like oil and, of course, natural gas. So, of course, March is starting to look very much like January and very much like February, but we're putting a very strong stamp onto the first quarter. You got to be in it to win it here on the MTI Minute. This is Kevin Dixon. You have a great weekend. Get ready for next week, and we will see you next time.